All right, can I have your attention for a moment, please? Okay, I think everybody's got their handouts here. I want to welcome you all to the Total Partners Fall Luncheon Meeting. We're going to have presentations by several different people today and talking about several different ventures that we're involved in. Make some introductions here first. Dave Cole's here. And Dave's an accountant. He's a CPA. He works with the Woodward firm. Dave and I go back over probably 40 years.
I didn't realize you were that old.
Yeah, you look better than I do. Fantastic. Anyway, Dave's one of these guys that's got more abbreviations behind his name, and I don't know what they all mean, but he is well qualified.
I didn't make them up.
Yeah. On a serious note, he is specializing in exit planning strategy. And that's what you're focused on now. So people that are looking to exit a business or something, he'd be the guy to call. Okay. Also introducing to you today for the first time is a new associate that has joined Total Partners, and that is Clint Privet. Clint's right here to my right. Clint is an attorney. He's likewise got several affiliations or abbreviations. He's a JD, an LLM, and a CPL. Which for what we're doing right now is really good stuff to have. He's had about 10 years of experience in doing land work. A CPL is a certified
professional landman.
Professional landman. The LLM is a designated master's in energy law.
Yes.
And then, of course, his Juris Doctorate, and he is with the Oklahoma Bar Association. So anyway, we're glad to have him, and you'll understand more why we're glad to have him as we get into our presentation. We also have today one of our favorite geologists, Mike Smith. Mike Smith's here, and he's going to give us an update on the Henson Well and Seismic Partners. And he's got a presentation put together. We also have Craig Van Horn, CEO of RED, Royalty Energy Development, and CPA Kyle Stone. And Kyle is working with the RED Group in an accounting capacity, and he's also here to assist in that presentation. Talking about presentations, we're going to talk about, as I mentioned, Total Seismic Partners, Production Partners, a brief update on Adams Creek Partners, which is the real estate deal in Broken Arrow. And we're going to make a presentation today. The last presentation will be for our new fund, Total Horizontal Partners, the 24-25 fund. We have also, as you can tell at the top here, we have formed a new management entity, Total Management Partners. Clint is a principal in that with me. The original Total Partners is a single member LLC. It's my company. In order to give us a line of succession and some long-term management viability for our ventures, we formed this new entity, which will be a regular LLC, and that way we will have the ability. We'll be moving other entities underneath that for management as we go forward, but that's part of our overall plan. Okay, so let's start now. Also, I want you to know this is kind of an open discussion format today between the principals here that are making presentations, but also you as the partners. Don't hesitate to ask questions. We're going to cover a lot of material and a lot of ventures, and it's going to be kind of jump around from here to there, but I think it's going to be a real fun day, fun luncheon, because we have lots of cool stuff to talk about. So, Mike, if you're ready, I'm going to invite you up here, and we'll get started on the Henson Partners and Seismic Partners. You can give us kind of an update. All right?
Thank you. I get to
Yeah,
have the magic wand here.
You get the magic wand.
Okay.
Now, let's get your presentation up here.
My name is Mike Smith, geologist out of Oklahoma City, and I came here today to inform you of what we're doing on the Henson and the Henderson wells that have been drilled. An update, been successful. Just a quick recap, we ran a bunch of seismic out in this area looking for small features. On these small features, structures, we have several different zones. In this case, the Viola, 2 zones in the Viola, and 1 zone up in the Winnett Sand. The Winnett Sand is a channel system that's been buried down about 3,000 feet. And the Viola down below that are actually carbonates like offshore Florida at about 100, 150 foot deep. You get these dolomites that form porosities around shoreline, in this case around small features. The Henderson we drilled first. This is 160 acres. This is a 40 acres, 40 acres, 40 acres, 40 acres, and 160 acres. The Henderson is here. This map represents there's a fault right here, a break, and you drop down on this side. You come up on the other side, and where the contours are, that's the highest portion of it, according to the seismic we ran out here. That's the highest portion of it, and then we go on down and down deeper. And this is the Viola structure, and it's about 3,800 feet. And above that, because that structure was there was a channel that came through above that. And that channel is like your garden hose you might have across your yard, and your yard may go up and may go down. And that garden hose, when it goes across your yard like that, if you were to put oil and water in that thing, that oil would migrate to the top part of your yard inside that hose. Well, that's what's happened here in this channel. It's migrated up over the top of this structure and gone down up here to the north. So the channel that goes across here is full of oil. And so I'll start with that. Our Henderson is producing from that channel, and it's producing 50 barrels a day, and no water. That's fantastic. And right below that is the Viola. We have two zones in the Viola that we chose not to open up at this point. We wanted to see what this channel sand would do for us, so we can explore for it in some of the offset wells. So this is 50 barrels a day right now. This is the newer Henson well that was drilled, and we did encounter the same channel. Matter of fact, it was even higher, and it gave us great shows. So it looks like it will be productive, and it's behind pipe right now, so it's a bank for us. Because down below in the Viola, which is what the structure's on, we have two zones in the Viola that we opened up for a test, and it tested 7 barrels per hour, which is like 168 barrels of fluid per day, and it had a 30% cut, so that's 50 barrels of oil a day. So this is capable of producing 50 barrels of oil a day, and we'll have to get rid of some water. But anyway, that's 50 barrels a day out of the 2 Viola zones, and that's 50 barrels a day from the shallow Winnett sand. So let's go to the next slide here, if you will.
Okay.
This is we'll call it a mud log. When drilling, we monitor the drilling time, and fast, slow. We look at the rocks, and we look at the gas that comes up in the mud system when we drill, and we also look at what comes up with that mud, which was when we drilled into the top part of our 2 Viola zones right here, the Trenton Viola. All of a sudden, we had strong odor of oil, and we had oil in the pits, just coming on up. And we had, so we continue to have strong oil odor. And then we got to the second zone. By the time we got to the second zone, we had oil in the pits again coming up. And you could take a big 5-gallon bucket and just go out there at the flow line and just fill it up and just hold it for not even a minute. And all of a sudden, you see the oil on top of this thing. That was our 30% cut. So that oil was coming up when we drilled the well. Okay, next one, please. And this was the report that day. We don't need to go through all this part of it, but the important part is we have a 30% oil cut when they swabbed it for 4 hours, and we were averaging 7 barrels an hour with 30% oil cut. So that's what the math I just did was 7 barrels per hour times 24, and then a third of that, that's just over 50 barrels of oil a day. So we'll separate out the oil and separate out the oil from the water, and so that well will be capable of making 50 barrels a day, and that's out of our Viola in our
Quick update. I talked to Dave Robertson this morning, the operator. The pump jack is set. It is running. He expects just a few days will be on oil. It's been too wet to set the tank battery. We're going to flow it back into frac tanks, but we are we're moving fluid now and expect to see some good oil here in just a few days.
You bet. Next.
Okay.
What do we do with the water?
We dispose of it. There's a local disposal well down the road that we'll dispose into, and we'll have tank batteries out there on location. They fill up. Truck comes by, takes it. We haul it off. Usually cost about $2 to $3 per barrel, and Dave knows some folks out there, so we'll probably get the $2 deal on the water.
Also
Mhm.
on that,
Mhm.
Dave did say we were looking at alternatives for a disposal well.
Right. Mhm.
Either in an existing older wellbore nearby, or I don't know if he visited with you about the possibility of buying that olive well
Yeah.
and
Mhm.
its disposal facility. So,
Yeah, and when you invest in a disposal facility, we take an old well and we open up the lowest zone in there, and it will take the water, usually on a vacuum. And you do that after you find production. That way you have more than one well that's contributing to the value of your property, and if you can get rid of that water on your own property, well then it becomes real cheap. And so that's a good thing. And talking about the olive well, this is a log on the olive well, and this is the log on the Henson well. And I just put this up here to illustrate the two zones in the Viola that I just talked about that have the 50 barrels a day capability out of it. These two zones, if you put it up next to the olive well, it has the same two zones. And the one zone they popped open on the olive well, it produced 116 barrels of oil a day and 336 barrels of water. And it's cumed over 270,000 barrels of oil and still making 8 barrels a day. So that Viola out here has some good longevity and it's very permeable. So our Henson well will have production here plus up above in that shallow Lynette sand behind pipe. And we already know that shallow sand's capable of doing real well for us because in the Henderson it's making 50 barrels a day. Okay, next.
Well, Mike,
Yes, sir.
do you have any plans on commingling the two zones?
No, because the Viola will have water, and right now the shallow zone, the Lynette sand, does not have water. So if we go and open up two zones of the Viola that have water, and a zone up above that doesn't, you're introducing water in there, and if you bring water into a hole, then that's putting pressure back down on the formations. Well, you inhibit the flow of fluids coming into the hole. So it's better just to go and produce the Viola together and get rid of the water and keep that behind pipe. You can open it up anytime in the future, but it's a bank for us, the shallow zone in that well.
How productive do you think when that will be just as productive as what we're doing in the Henderson?
Yes, it'll be, and matter of fact, that in the Henson, we have the same 50 barrel a day zone, shallow zone, and it's 15 feet higher. And so it's, and here in the Henderson, down dip to that, it's 50 barrels a day with no water. So the water's, this channel's come through here, it's pretty full of oil for some distance away from our project. But we have two more places we want to drill, which will be up dip, will be here, and that will HBP, meaning nobody can drill in any parts of this thing. So we can further develop down dip if we want to out here in the future if we feel that that's necessary. And while we're sitting here, let's talk about the economics because that's why we do this. We want to make money. So if right now this is 50 barrels a day and this is capable of 50 barrels a day, just let's take one well here. 50 barrels a day at $70 oil this morning. You net that out, take taxes out and everything, takes it down to a net of $50 per barrel. And if we're making 50 barrels a day, that's $2,500 a day net it's making, and that would be times 30 would be $75,000 a month. And so let's just keep that as for cash flow, $75,000 a month for 100% of the well, subtracting taxes and everything. If this well to drill and complete a well is $750,000, and we're making $75,000 a month, that means take $75,000 a month and put it into a total cost of $750,000. That means 10 months. That means every 10 months, this Henderson well will pay off. That's the bottom line economics. If this makes 50 barrels a day every 10 months, this well will pay off. So after that, so that's 100% return. Then after that, it's all gravy after that. And so, and on top of that, we have the shallow zone that hasn't been productive, that will be productive here. And we have the deeper Viola zone that will be productive in the future there. So we have wells that are capable at the rates that they're producing to pay off in 10 months, every 10 months after that. And we have more zones behind pipe. And we will control all the acreage around here. And so it becomes a bank out here. It becomes how efficient we can continue to produce it. And like Scott was talking about, we'll invest in a well just to the south of here to put to make into a disposal well, so we can get rid of our water locally and make it even cheaper.
What kind of decline curve are we looking at?
There's no decline. It's been 50 barrels a day straight across. Matter of fact, it's an incline curve. It started off at 36 and went up to 40, 42, 45. It's up at 50 right now. So that,
explain the reservoir dynamics, why that happens.
well, when you first pop open, when you drill into a zone, and it's never been exposed before, and so you treat the zone to help increase the porosity and permeability around the borehole. And so you've introduced mud, you've introduced acid, you've introduced pressures in the formation. So now everything goes the other way. And so when it starts coming the other way, out of these holes that you could stick your finger in, perforating holes in the pipe, then what happens is now the flow's coming in. Now you have to clean up everything in the formation. So you're producing avenues of downdrops of pressure. The pressure inside the formation may be 600 pounds, and in the pipe you make it more, you void it with fluid, so it can be 600 pounds dropping to maybe 300 pounds. So it always produces into it. Once it starts producing into the pipe, it cleans up all that sand, all those little permeable avenues coming into the borehole get cleaned up, and the longer it produces, the more avenues it makes towards that borehole until it's created a nice channel system to the around the borehole and can produce as much as it can through these little holes. So what's happened here is that it's cleaned itself up, meaning it's all the oil that's being pushed towards our borehole is pushing through all the other silt stones and acid that's been void, and now it's cleaning up to that's probably the highest it'll get is 50 barrels a day. I mean, there's only so much you can do pushing through those little holes, and so it's cleaned itself up. The reverse happens with some wells that you produce over a long period of time, and your decline curve, there's a decline curve, and usually that's a function of pressure. I mean, we take pressure out of our formation, there's not enough pressure in there to push oil into it, so it isn't normal decline curve on some wells that maybe 100 barrels a day, they'll drop down to 50 barrels a day after a few months, and then maybe 20 barrels a day for the rest of their life. In this case, that has such good porosity and permeability, holes that are connected together, that the fluids are wanting to come out, and because of that porosity and permeability and the fluids coming out, they establish a pretty steady rate of coming through those holes right from the beginning, and will increase into the place where that's the best they can do, and they'll continue to produce at that for quite a long period of time. The system has pressure in it, and it's not been popped open in any other well nearby. If we had 5 or 6 other wells around here, and we just happened to be in the middle of a field, that field might have started off at 1,000 pounds, and it may be down to 500 pounds now. So when we're drilling into it, our production would be compromised by that, and might start off with lower pressure and even get lower real quick. We don't have any other wells that produce from it in here, and so that's the first well up shallow, and that's the first well down deep here. So we're working with good porosities and permeability.
Good reservoir characteristics.
They were
Do
clean.
you think the Viola is the same as the sands?
No.
Of course, you're talking about these decline curve.
The Viola will be, similar. They'll produce more water. There's water that helps push it out, and the water will come in behind and push and sweep through it. But we have 2 zones, so between the 2 zones, it'll steady out. If we had 5 zones, you'd never see any kind of deflection because there's 5 zones contributing. If you have 1 zone, you'd see variations a lot more. We have 2 zones, so we're not going to see hardly any variations in
The
production
Viola
for
is
quite a while.
a longer life reservoir than the Penn
Yeah,
Sand.
just like the Olive well, that's been productive since 82, and it's making 8 barrels a day still after 270,000 barrels of oil. So that's what we have looking like here. It's the same 2 zones, and now it's just a function of how this is our structure, how much oil is wrapped around the structure in here, and our ability is to produce it and bring the water with it because it helps sweep through the oil.
Something I need to make everybody aware of is that Dave, most likely, assuming a successful test of the Viola, which we're in the progress now, is going to propose the 2 additional wells to be drilled. Our cooling orders run out in February, end of February, I believe. So Dave's going to propose, and we're going to drill those wells back to back in February, and that'll offer an opportunity to the partners to prepay this year if you want to take the deduction. So people will have an option, number one, to either prepay this year or pay next year. But if you prepay this year, it'll be a very high write-off, since we have already amortized the cost of the seismic, the geology, the leasing. This will be probably 90-95% write-off on dollars that go into the prepayment on these two wells. So that'll be another year-end product, and we'll have information out on that before year-end. So have that in your wheelhouse when you're thinking about your investments here.
Yeah, a comment on that. It's always best opportunity for prepaying is something that's already paying you. Meaning, when you have income coming in, all you're doing is enhancing your income coming back the other way, because you're getting that tax deduction that's making your upfront cost being less. So you're paying less to find the same amount of oil. So if you have those opportunities before, was it March 15th or something like that?
That's correct.
Yeah.
And these will both be spud. They'll be drilled and completed and online prior to March 31.
So what we hope is that's 50 barrels a day out of this is going to be 50 barrels a day out of the Viola. These both have the same zones available to them. So we could be, if you want to multiply that, a couple hundred barrels a day coming from that field. That's all I have.
All right. Is that it?
Yeah.
Any other questions of Mike, or anything in respect to the seismic and the wells that we are planning on drilling in February?
Do you have any feeling about the wells you drilled?
Yeah, sure do. I mean, these contour lines are like being on top of a hill and going down. And here we have production in the Viola. It should be productive in Viola. It's up shallow now. This two zones in the Viola productive. They're all on the same structure. So I would assume that we should have a similar.
This one's up dip from that structure.
Yeah.
This one right there.
And this will be the highest well. And so there is one more zone in the Viola that's just below the first two. There's one here, and it has oil in it also. We may be able to get high enough to grab some of the oil there. And if we do, we're talking about 10, 15 foot of free oil inside that, which is I'll be happy to get that, because that's another 50 or 60,000 barrels of oil just easy captured at that point. But all of these, my feel for it is we found the structure, the seismic. Well, we knew there was a structure in there. Seismic identified it, and then we drilled the well to identify the zones. We drilled the second well to identify the zones. Now we have 3 zones to chase, and we have 2 more locations. So it's 4 holes in the ground to get out of 3 zones, and that would be 12 opportunities to extract that oil, and over a long time.
Just hit or miss if we're gonna hit the sands on these other 2 wells?
Well, we have it here, and so we're in the channel system right here. That's coming through here. So hit or miss. It looks like we're in the channel system. If we were moved over here or moved over here, it'd be iffy, because I don't know how wide the channel is.
You're off structure over here, and you've got the fault here.
Right. But what I do know is right to the southwest here, there are 2 more wells that are in that same channel. So I know it goes right through here. It seems to be about a quarter of a mile wide to a third of a mile wide, and of course channels, they meander around, and this is an old feature in here. So what's happened is it's just lapped up across this, and I think we're in really good shape for these 2 wells.
So we've got 2 potentially productive zones in each one of these wells. 3.
2 Viola and 1 Winnett sand.
Okay. All right. Any other questions on our Henson well or our seismic development? All right. Mike, thank you.
Okay, you bet.
Thank you for your
Call
presentation.
anytime if you have any other questions. Thank you.
All right. Okay, I'm going to introduce Craig Van Horn now, and he's going to give us an update on Production Partners. Let me see if I can get. There we go. I'm going to hand off the official point to you now.
Thank you, Scott. Thank you guys for being here. Most of you are probably familiar with the asset that we purchased back in June. We've been operating it since then. We've had some really good wins. We've had some adversity, which comes with the territory. If you're in it long enough, you're going to have some things that are bumps, but we've been able to turn a lot of those into long-term positives, and we have identified some operational efficiencies going forward that we're looking into, and then also we have an offering from a third party who would like to explore the Mississippian horizontally on some of this acreage that would give a sizable return. So we're going to go over all that here today. So this is just an overview. This is what we had. This is what Continental produced in 2023, gross barrels per day on this same production. These
are the operated assets only.
This
correct?
is only the operated assets. It's not the non-op or the overrides. So this is just talking operations mostly today, other than the acreage. This is what we reported 4 months ago when we last met with you all. We were producing 116 barrels a day. We were selling 107 barrels a day. As of the last 14 days, we're producing 152 barrels a day, and we sold 143 over that 14-day span. So every day we sold 143 barrels. So all of those numbers are up. This is kind of where we expect it to stay. It'll only go up from here, but this is kind of our benchmark where we wanted it to be based on our projections going into this of how Continental operated historically with 3-year averages. And then once we took it over, everything was slightly down. Part of that was that they weren't investing back into these assets. Part of it was they just, they knew it was on the chopping block. So, getting something back up and running wasn't necessarily their top priority. And then additionally, when we saw some of the bills coming back from them, we decided that we would rather us take on that burden when we took it over than have them go and take it over for us. So this is much more in line with, it's actually a little bit above what our expectations are, especially on the sales side. So what that means is that the biggest producers in the asset class are all producing at or above what we projected them at. So we're selling more oil consistently. So just so you guys, you're probably aware, but every 160 barrels you get to sell that load. So a well that makes 5 barrels a day sells 1 load a month. So if you think about it in that perspective, we've kind of taken the highest producing wells and made sure that they're producing at the highest level so that we can sell more and get a better return each month. You can go to the next one.
And that's the reason for the discrepancy of barrels produced and barrels sold.
Correct. Like we're producing more into maybe some smaller producers that may not sell every single month. So you're still producing that oil, but you don't actually get to realize that gain until you actually sell the oil. So there's some wells that are in our package that may make a barrel a day, but it's more of a gas well. And so that'll sell, roughly 2 loads a year. And so you'll have 1 month where all of a sudden that load will hit. But we're trying to do consistent cash flow with the bigger producers. And so this sales number is really the dollars and cents of it. The other is unrealized gains, basically. So this is just a reminder of the AstroBleem. So this is all of the operated assets are listed on here. I think that some of the non-ops are actually on here as well. But the AstroBleem is in the circle. That's the geological anomaly. So what we're getting into now is we were approached by a few different parties recently about exploring into the Mississippian, which we do have some Mississippian producers, but they are specifically wanting to come back and explore horizontally, which we don't have any horizontal Mississippians. But we've been negotiating with them over the last couple months and have come to a deal. I'm giving it a 97% likelihood that it's going to close at the beginning of next year. And it's going to cover, you can go to the next slide if you want to. It's going to cover these 4 townships initially. They do have interest in the lands outside of this, so we have lands all where all the dots are. This is the bulk of our production is within the AstroBleem as far as barrels per day. The actual lands that are being affected by this, though, only interact with, I think, 2 of our producing wells based on where the acreage is and where our producers are. So it's relatively outside of what our core is. We don't have plans of exploring the Mississippian at least for the next 5 years, and so we see this as an opportunity to return. This is a very conservative number because they haven't gone through due diligence. It's probably going to be closer to 25% of the total investment into the prospect as a whole will be returned all at once, and we won't sell a single barrel of oil of production in with that. So on top of that, we'll maintain all of our production. We'll get a nice cash return and hopefully a little bit of an override in all of the wells that they then go out and drill. And it's only the Mississippian.
It's going to accelerate our potential payout.
The payout, yeah, about a quarter of it likely will be returned all at once.
And this was something obviously that was included in your original financial projections because we attributed no value to the leasehold. And in addition to what we're doing here, we've capitalized on other value, like the Roadrunner well.
Correct.
Show them right up in Alfalfa County where that well is.
Yeah, I don't know the exact. You want to pull that up? It's in 22 of.
Anyway, it's up in this
It's up
area.
in here,
There's
it's South Alpha,
County.
yeah.
And that's Roadrunner Partners. Some of you are in Roadrunner Partners, and as you know, we just finally got our pooling orders. And this is something that reflects on part of our new business model for the horizontal partners we're going to talk about next. But these people that are developing these resource plays, they get ahead of the land. In other words, they don't button up. You'd think, well, they're going to get every lease signed and I's crossed or I's dotted, T's crossed, all that. They don't. They just, the minute they get the chance to drill it, they let the land catch up. This creates opportunities, like in this case, we elected to participate, but we don't get our ability to participate until they finalize the pooling, which this well, the Roadrunner's already been drilled. It's already been completed. It's been flowing back for 2 or 3 months now.
Yep.
It's a 2-mile lateral, great offset production around it, and but by the time we start getting paid on it, we'll get a substantial return of our investment, and the risk is negligible because there's no drilling risk or completion risk.
Well, and you paid zero for the leasehold.
Yeah.
So yeah, that's the.
Well, we did, and now Roadrunner Partners paid for
to
the
participate.
That's right. So
Correct,
there was value
correct.
there on both sides.
Correct.
Production Partners and Brave Energy. What was it, $800 an acre?
Right.
That we paid for that, and that was also included in a cash distribution. Likewise, it wasn't projected in our original numbers.
Correct. I meant initially you didn't. It wasn't valued like you said. We valued on our package. We valued all the leasehold with Continental's offering as $0, and so anything that we get from there is simply a bonus. The stuff that you guys do after that is obviously you pay for to form that entity. But I don't want to muddy the waters. This group is also interested in the surrounding townships as well. So we're in talks with what that would look like. This is going to be a substantial deal, 25% return. That would be worst case scenario. So I always like to give the conservative value, but I think that it'll probably likely end up around a quarter of the total investment returned all at once.
Fantastic.
We can go to the next one. So this is then versus now. We've kind of shown you this a couple of times, but wanted to give you a few updates on these. So we Scott had outlined that we had a couple of failures. When the big submersible pumps go down, they're pretty expensive to bring back on. The good news is they come back, and we've actually increased production on both. So the Donna is it's been touching 50 barrels a day every few days, but it's been averaging that over the last 14. The Emma, historically, since we've owned it, has been about a 25 barrel a day well. This is Continental's numbers from 23. It was about 17. This gives you the idea of the cash flow on that whenever they owned it, so you can kind of project out what we're looking at on our side. The Bob is another one that's on Amplified. It's been producing at a higher clip. This is one that we just brought on over the last couple of months since we last met. It was previously down, so it had zero value on our projections, and they made $0 on it in 23, and it's been averaging 5 barrels a day since we brought it back on last month.
What did you have to do to bring that one back on? Was that the one that had the casing leak?
Nope, this one had a parted rod, and so it's a relatively easy fix, and we kind of went through all the historical. So one thing that we've done is all these wells that have been inactive, we've gone through and kind of identified the ones that look like they have the best potential for returns, and that includes whatever the downhole issues are that are keeping it from running. And so a parted rod is a relatively easy fix. In a normal company, it would be something that would have been brought back on immediately. In Continental's matrix, it was not a high enough value well for them to bring on. And so this was one that we had identified after we kind of had our bearings of all the other assets and got everything in a place where we felt comfortable. This is one of the first ones we identified to bring back online. So we actually pulled the rods. We actually sent those to get inspected because they had been in the hole so long, replaced it with our inventory that we had from other wells that we've done so far, and then brought it back online. And so it's making almost no water and 5 barrels a day of oil, so it's a pretty good well. The Fred is one as well that when we purchased this, it had been down for a while. So that's what they had produced in 23, and it's obviously doing a lot better. It's also unamplified. This is, you've been there. It's right next to the Donna, the pumping unit right there. Yep.
Right. You can see it from the...
Yep, right there.
Okay.
Are there any other wells like the Cone that have yet to be brought online?
Yeah, there's several. I could go through and figure out how I can pull something up real quick. We've kind of put them in tiers based off of that, and we've asked for when we purchased this, we asked Continental what the issues were that they had identified. A lot of times they're wrong, is what we found out. So, and sometimes it's good, and sometimes it's bad of what the wrong is. Sometimes it just needs a pump. Other times there's bigger issues that are down a hole. We haven't really run into a ton of bigger issues, but because they're wrong on the stuff that's small, we know they're probably wrong on the stuff that may be bigger too. So, so the Sloans we brought those on. They're on. Yeah, there's probably 5 or 6 that are similar to that.
You can do a summary
Yeah.
or share that information.
And you can put it on your update.
And
Okay.
then,
Yeah, we'll make sure to do that.
We'll be doing our next cash distribution next week on this, so we'll have an update from Craig at that time on that.
As far as the technology goes, all of the assets that are lined in have this was done last time as well. We've started to move outside of the Bleen now with the data. So like the Cone, they call it the Cane. I don't know why. I think I know English until I go certain places, but they call it the Cane. The Koehn is actually outside of the Astro Bleen. It's pretty close, but it's outside of it. So those wells now are getting a little bit more attention. We're installing the amplified system on them. It should just get better and better as far as efficiencies go. But we've already noticed that a good example would be the Fred that we had previously on there. We brought it back online. We actually deepened it. We didn't deepen the hole, but we dropped the pump lower than what they had it previously, and we had a failure of the pump that was scraping the inside, and there was chrome shavings coming out. And so because of that, it tells you that the hole's crooked a little bit deeper than where we put it. So we actually brought it back up another 60 feet. Still deeper where they had it, when Continental had it, but because they had it 2,000 feet above where it should be. But another 60 feet is actually making more oil, and the pump's actually performing better. So little things like that are always happening, and Amplified helps us to identify when those things are happening too.
Because you can see that. If it's running
Yeah,
down hole, you
yeah.
can see it
You see that it's not pumping efficiently, and it starts to lose it a little quicker than normal. You know that something's probably wrong. This is an update of something that we've identified to help efficiencies. You guys recall this is the water system. So the Chet disposal is right there. The Donna is right there. The Emma, Sam are right here. So this is the water system. All the water currently goes to this disposal, and then the Bob and the Nelly, which is here, actually are lined into a third-party disposal, which we pay for each month. So one of the things that we've wanted to do since we bought this package is bring a few of these wells back on. Scott, when we went on our field trip, you went to this one. This is the Marjorie. It's the one that was a submersible well. They decommissioned it whenever they got rid of their other disposal
Right.
several years ago, and it's a 20 barrel a day well that's just sitting there. But they don't. There's not a capability to take the water somewhere unless we wanted to send it to that third party disposal. So we've been looking at options of disposing. Last time we had met with the commission about potentially converting the Chet back to a Arbuckle disposal. We think for political reasons that's not necessarily a great move. The commission is pretty. They don't like Arbuckle disposals because of the earthquakes that were happening. So even though we're producing from the Arbuckle and it would be technically an injector, they gave us enough warning to say that's probably not the best idea. So we're looking at a few of the wells in the area and also some of the ones that are our own that are maybe not great producers, but we have the existing infrastructure. So one of these is the Clarence 6-1. It sits right here. It is a pretty marginal well, always has been. It's a gas well. It's hardly made any fluid. It's lined into the disposal system. And so we think that it would be a great candidate to convert to a disposal. That's going to be one of our next projects. And that would allow the Donna and the Fred, which equates to about 1,100 to 1,400 barrels a day of water to be disposed rather than into the Chet, into this new disposal, freeing up our capacity on the Chet, which would allow us to either bring on the Marjorie and or dispose the Bob and the Nelly instead of the third party to send it to our own disposal and save that cost. So there's a few different options there. There's a few other wells in here that we could bring on if we had more capacity to on the disposal. So that's one of our solutions that we're looking into. This would incur probably about a $50,000 cost on the conversion, but I think we would recover that relatively quickly, both with production and not having to pay that third-party disposal fee. We go to the next one.
Okay.
So, kind of a recap, our next steps. This is one that we had pulled earlier at our last meeting. We pulled the Herman well. You go back one, Scott, sorry. The Herman sits right. It's hard to read. It's right there. That's the Herman. So it's right next to the Emma, the Sam, the Marjorie. It's right next to the disposal. We're in the search. You can go to the next slide. We're in the search for a new rod string for it. We had it tested when we pulled them. They didn't look very good. And 11 of the rods came back inspected and saying that they were in good shape. 11 out of 8,000 feet of rods. I mean,
That's a lot of rods.
it's a lot of rods, and 11 came back, which means it was not in good shape. So we need to get a new rod string for it. The issue is that it's a 5/8 string. It's kind of hard to find, at least for a good price, and so we're still in the hunt for that to bring that back online. We're going to build an AFE that will be presented for converting the Clarence to a disposal. We talked about the acreage package. We're very close to getting that papered up and finalized. And then we're just going to continue doing what we have been doing, which is optimizing these wells and making more oil. That's all I have. If you guys have any questions,
Great
we're
presentation.
happy to answer it. Yeah.
Okay, questions, Andy?
On that sale that you're looking at doing, is there any overrides on that, or is it just?
No, it would. So on, I would say a majority of the acreage, they haven't gone through due diligence. So it's tough to say exactly right now, but right now we do have a small override that would be included on it, on any new production.
You're saying we will have an override?
Yes.
Okay. I think, Andy, is that what you were asking?
Yeah.
Okay. All right.
So what is that override? What is the negotiation?
It'll likely be somewhere around 0.5% of an override after the completion on any new production. It's very dependent, though, on section by section because the net revenues aren't the same on every section. Every lease has a different net revenue in our acreage play. So depending on where they drill the wells, it's going to be around 0.5%.
Do you suspect any of these horizontals will deplete any of our formations?
It's unlikely that they're going to affect our production at all. And we've gotten a lot better at working with the new drills on how to, initially there was a lot of flow back that came back to these wells. If you didn't shut them in, if you didn't do the right stuff, then you got watered out. We don't have a whole lot of Mississippian production, so the likelihood that we're going to have much communication is pretty low. Mike's probably a better expert on that than me, but he doesn't know anything about this, but he's a better expert on all of that stuff than I am. But from what I understand, our production isn't coming from the Miss. The likelihood of it communicating is going to be pretty low.
The bulk of our production is from the Arbuckle.
The Arbuckle, yeah.
We're at 9,000
Yeah, we're much deeper.
And the Penn Sand is way up hole from there.
Yeah.
I could add to that, the places where they've gone in and drilled horizontally near wells that have been vertical, let's just say that in the Mississippi area here, there were wells that were making 5 barrels a day after 30 years. Now they're not 5 barrels a day. Horizontally, when they were drilled, those units, because they went in and they fracked along where the lateral was, all of a sudden those vertical wells would go up to 50 or 80 barrels a day, because the horizontal development there caused the fractures to go out away from their lateral extensively, and it would connect all the porosity together. So they would go back in those old Mississippi wells, and the same thing over in the Hunton. Same thing happened in the Hunton. All of a sudden, it enhanced the vertical wells. In order to make that work, though, properly, they had to go and temporarily shut in all the vertical wells in that section. So when they fracked it would go out and wouldn't go and damage the boreholes. But as soon as they were done fracking, they opened up those vertical wells and they had enhanced production. So it could be a benefit down the road if this area gets fracked up in the Mississippi, behind pipe formation in the Mississippi. Behind pipe could have quite a bit of oil freed up.
Okay, well, it could be a bonus.
Could be, yeah.
Okay, what are the questions regarding our production partners? All right, really appreciate you guys coming over today and making this presentation. Thank you. Okay, we're going to go here and do something a little different now. Clint, why don't you get up here with me? We're going to discuss the horizontal partners.
Scott, the only other thing was if you wanted to show those pictures.
I did not get them.
Okay.
But what I can do is send them out with our next board just to show.
Yeah.
He's taken pictures of what was it, tubing links, right, and the threads.
Yep.
And anyway, that's something we can include on our next. Okay. We sent this out in our first report when we announced the total horizontal partners. Clint, come over here and get on the other side so we can go back and forth with this. Yeah. The Anadarko Basin has become a new hot play on a very large scale. And this Ten Oaks Energy Advisors, they did I think this is a 42-page technical review. We included it. But there is a tremendous amount of activity now, and the technology has improved from 10, 15 years ago. Most of the horizontals, as you know, when we first got involved in our early funds, we were almost exclusively in horizontal wells in the funds. Most of them were a 1 mile lateral. They are now doing what's called multi-unit laterals, which means they are, in some cases, 2 and 3 miles, and that's the majority of what's being drilled out there now. And they're drilling these. And the Anadarko is a deep basin, and we're talking vertical depths of 13,000 feet?
In some cases,
yeah. In some cases,
wells are about 11,000.
So they're going down 11,000 feet, and from there they're going out 3 miles. So we're talking total measured depth wells of 27,000 feet. Incredible. The AFEs on these wells on the 2 miles are about 12 million.
Yep.
The AFEs on the 3 miles are in the neighborhood of 15 million. But the results that they're getting are astronomical. These are true monster wells. We talk about a good well vertically here in our seismic plate, 50 barrels a day. These wells come on in some cases. Clint, tell them what some of these production numbers are.
After 6 months, they're averaging between 500 and 700 barrels a day.
And that's they free flow. Oftentimes these ones we're offsetting. We'll get into this, but they'll free flow for months, sometimes year and a half, 2 years before you ever put a pump on.
The high months are averaging 1,000 barrels of oil a day. That's not equivalent, so it's just barrels of oil and then whatever associated gas is with it.
Yeah, that's not BOE. That's actual oil, and that's what we're targeting. That's another one of our primary targets. Is that it needs to be primarily an oil well as opposed to gas. This is an outline of the Anadarko Basin right here. You can see it's in the corner of the Texas Panhandle in western Oklahoma through this 50,000 acres, and they've drilled 121 wells, I believe, or 120 wells since 2021 in this area. I learned about this history a long time ago. Kat may remember this. We're talking about how was the Anadarko Basin found, which we have participated in other wells. You guys may remember the Granite Wash that we participated in, I think, in the 2011 program. That was before we really even understood what was going on out there. And that's a well that came on at 700 barrels of condensate and 20 million cubic feet of gas a day. And when we got our first check, it was almost, you don't get paid when you're buying under other operators. They don't have to pay you for 6 months by law. So typically you don't get a check until it's produced for 6 months. But when you get a check, it represents a substantial amount of your investment with the first cash distribution. Anyway, this is what this area looked like. You can see Oklahoma, you can see Texas. You've all heard about we were an ocean under a sea. This is 400 million years ago. And we had a mountain range that came down right here, the Amarillo, Wichita Uplift. Mountains here I had one engineer tell me they rivaled like what Mount Everest is today. These were very tall mountains that, prolific. Anyway, and Mike, you know this a lot better than I do, but during, I think, the Pennsylvanian era, there was a huge tectonic shift underground that created, and this is 300 or 330 million years ago, this mountain range collapsed, sloughed off into what is now the Anadarko Basin. Is that fairly accurate, Mike? Me?
Yeah, that mountain range actually separated, and as it separated, all the volcanics came up, and then the place became compressed and made it up even higher. And so all that rock that got shoved up even higher was eroded off the top, shoved down to the north into the Anadarko Basin, and filled it up. That basin there is probably filled up with 30,000 feet of sediment from on top of that mountain.
So anyway, that's the history of the deposition, which I found interesting. This is drilling activity, recent drilling activity. And you can tell Clint a little bit about who's the active people out here, the operators, and what the targets are.
So a lot of this is targeting the Cherokee series, and these are all new wells. And the series has multiple horizons. There's a shell, there's a classic sandstone, and the players out here are Mewbourne classically is who's drilled a lot of these. And a Texas company, family owned, so they drill out of their own pocket. Is kind of one of the reasons that we like to chase them.
They've got 7 rigs running full time right now.
Yes.
Right here.
Yeah. And the word is they're going to add a couple of more rigs later this year, so they should have 9 rigs running continuously. Devin has also made an appearance out here in a couple of wells that anecdotally are flowing a couple thousand barrels a day on a real choke back system. We don't have a lot of production information on that, again, because these big guys kind of keep their cards close to the vest for the first 6 months. But the Mallard well is centrally located in Custer County, and so they're delineating the play farther southeast, and there are planned wells kind of out, what they call outside the fairway that Mewbourne currently has regulatory filings on. So we're out here chasing Mewbourne and Crawley is another corporation that's out here drilling good wells. And right now, the central area is here where all these wells have been drilled, but again, they're pushing south and east with new drill activity.
One of the most prolific formations out here, which is a conventional style formation, is a sandstone. It's the Red Fork. Red Fork is prolific all over Oklahoma. We have some vertical Red Fork production. But out here, the Red Fork is 11, 12, 13,000 feet deep, and it's much thicker because of the deposition of the formation, and it's extremely high pressure being at that depth. And a lot of these are what's called overpressured in terms of and I don't understand all the geology. Mike's welcome to weigh in, but there is an overlap of what created a more high pressure zone. And these wells that Clint's talking about, the one down here, 2,000 barrels a day on a choke, and I think we heard it was what, an 1836 choke. So
18, yeah.
it's choked way back. I mean, incredible production. Most of these, if you look at the well cards, and that's another thing that Clint brought to the table, we have drilling info now. And so we're able to go online, get the latest drilling and production information on all of these. And that way we're able to do our own homework and vet these prospects. Included on our sheet that we handed out today on the back page, these are the identified prospects that we have letters of intent pending for leasehold under these wells in this area, and we have them with Newborn, Devon, Continental, and Copeland. Copeland is actually a local company here, and we're going to talk about their play specifically here in a minute. But that's our game plan, and we're going to do a two-stage offering, just like what we did in our initial funds. The offering will be open from 24 now until mid-25, and people investing this year will get a 75% plus or minus write-off. We do have acreage cost, which is not inconsequential here to buy into these plays. I think our average acreage cost is between $1,750 and about $2,600. That's
Yep.
what we're looking at. But anyway, that's what we've got lined up in those plays, and we're looking at more. Let's see. Let's go to that's another example of the drilling activity. Talking about Cherokee Shale, the Red Fork, and those are some of the bigger producers in the Anadarko Basin.
And a lot of these wells have million barrel or close to it EURs on them.
Yeah, that's what I was looking for a moment ago. We're talking estimated ultimate recoveries. If you look at the well information cards that are available on these, the algorithms that they use to project what the ultimate recoveries are maybe a little liberal, some of the stuff we've seen, but a bunch of these have 1.4 million barrels of oil. That's not BOE equivalent. And they have, in some cases, one of them's got 1.4 million and 9 BCF gas.
And that doesn't take into account any liquids associated in
So
GLs.
these are truly monster wells. Tell them about that Continental play that we discussed today, that we're looking at.
So, yeah, one of the deals that so far we've had to pass on because the election is actually today is down in Garvin County, next to Murray County, in southern Oklahoma. And Continental is down there testing the Simpson series. And so far, this will be one of the deals that we're looking at will be the second drilled unit into the Simpson formation. And so far, they have one producing well in the Simpson that offsets it directly. And of course, we don't have any production information on it yet because it's still in its first 6 months.
Did we not hear say something on that? Was that the one that was?
Well, this is offset to that one, but the Simpson formation is apparently going to be hot down there. And again, it's a series of formations as well. Then I think it's the Tulip Creek and the first, second bromides, and some other historically very productive formations that they're now going to explore horizontally. But it's a 3-well package where Continental is going to go down and spend over $30 million to drill these 3 wells, 3-mile section or 3-mile laterals. and what was available to us was about 6% of each well, which would be about a $3 million total package to participate in those wells with lease acquisition and the drilling costs. We'll see if it's still available in a couple of weeks, whether or not we can get into it. Like I said, so far we've had to pass on it because election is today and the funding would need to happen in something like 20 days. So those are the types of deals that we're chasing right now, though, down there.
How many acres you have to lease on a 3-mile lateral?
Well, 640 times 3, 1,900 acres or so. What was available to us was about 100 acres of leasehold in there. And Continental has some prolific Sycamore and Woodford wells down there as well, which would also have the possibility of being drilled. So there are also multiple pay horizons in those units.
Here's a local company, Copeland Oil and Gas. Some of you may be familiar with them. They've been around a long time. They have a prospect now that's right in Custer County, right in the heart of the play. And this is we're not going to go through the entire presentation. We met with Bob Nickel. He's the CEO of Copeland. He's a petroleum engineer. And they're going to do 2 1.5-mile laterals in Custer County. And we have the opportunity to be direct with Copeland on this, which reduces our leasehold cost a little bit. I want to show you this. This is a bubble map, and this is very interesting because these bubbles represent oil EURs, not just oil only, not gas. So these are big oil wells, as you can see. 800 is the top scale. So they're saying that these wells are on track, and this is a concern. If you look online, what was this well on the well card?
1.4.
1.4 million barrels of oil out of the Barrick. And you'll notice this is we're offsetting directly, and it's a 2 horizontal well play. We have executed a letter of intent for 10% of that. And that's going to be drilled next summer. So that's not going to be part of the portfolio here that we can prepay before year end, because it's not going to be drilled until late summer, early fall. But this is one that we're really excited about, and this is in the Red Fork, which is the sandstone, and it's the prolific play that's going on out there now.
And this one is pretty exciting because on the back of your sheet, it talks about a little blip of Tokeland, and it mentions both the Barrick well and the Abernathy well, which both have really good production numbers. And there's also an uncompleted Haggard well here as well that will be completed in the coming months. And again, we'll get production data.
He was Bob Nickel was telling us that Copeland participated in 6.25% of this Barrick well, and that thing has been on a tight choke, has been flowing, open flowing now for how many months? Do you recall?
I believe it's 7. 7
months, and trying to remember what they've tuned so far.
It's on the sheet. I think it's 100. Yeah, the Barrick has made 180,000 barrels and 1.3 BCF
in 6 months.
Yeah, 9 months. 9 months.
And that's the one on a tight choke.
Right.
So the detail on all of these, as I've mentioned, is on the back page here. This shows Red Fork production of wells that have been drilled out there recently and a little bit longer term. You see some of these down here vertical, and then these are the more recent ones. There's one right there. Well, that's the Abernathy, Newborn again. 1 month of production, and it doesn't tell you much there.
Yeah, Mewborn is definitely the big dog on the street out here drilling these wells, and who we're chasing as well.
Okay. Bob Nickel said that he will make time for us. He was potentially going to be here today, but he had some issues that he had to deal with family-wise. But he'll be at a meeting next year when we make this presentation and let him walk through the whole deal. Let's see if I can find a couple of these spreadsheets. We are getting this kind of stuff every morning from lease brokers, Why don't you explain to what this is, Clint?
This showed up today. I work with land groups, and I'm a land guy. I'm not a scientist or geologist. I don't know a lot about the operational side of stuff, but I've been in land groups for 10, 15 years now, and so I have a few guys now that have stepped out on their own and are buying their own leases and flipping them. And this is kind of the inventory that showed up just this morning. And we have a couple of deals we've locked up here, again targeting the Red Fork, and this Martinez is a pretty good opportunity to participate in the new Simpson play that is probably going to be blowing up in southern Oklahoma. And then the rest of this is stuff that they presented to us today. And, you know, we see in that mineral acres, we have opportunities to get anywhere from 3 to 100 acres in various proposed units. And this is the kind of inventory that I'll go through and vet, and we'll look at offset of production and kind of do a closeology on a lot of the stuff. Again, with my untechnical land background.
But anyway, the point is there's a lot of inventory here, and all we're short right now is the capital, which is the reason why we launched this offering in a very short time frame. We only conceived of having this meeting a week ago, and thank you all for showing up. We've got a pretty good turnout for a 1 week advance notice. But we've got a real story to tell here in the Anadarko Basin with major players, offsetting wells that are in excess of 1 million barrels of ultimate recoveries, and we're already in 5 of them. Right. Assuming we get it funded.
And going back to getting ahead of the land, one of the deals that we had discussed, the election is today, actually is under the bit right now. Continental has gone out and already drilled 2 of the 3 wells, and they're letting regulatory catch up.
And that's a real opportunity for us, because we can buy, just as we did on the Thunderbird, or excuse me, the Roadrunner, we're able to buy into this thing during the time it was being drilled, and we're not even having to fund it until after it's been drilled, completed, and has been flowing back for 3 months. So risk profile doesn't get much lower than that.
Whoa.
Yeah. Okay, guys, it's after 1 o'clock. We're going to open it up here for last questions. Yes, Mike.
I want to add to your last comment. You have to ask yourself, why do they let that happen? Why did they go and drill these things, have them producing and expose themselves to other people being able to come in and get in there? It's because the acreage position out there is, they only have, their acreage is going out on it, so they have to drill it. So they go out and drill it to hold all their acreage position, and then now these folks here are backfilling and taking that opportunity to be able to participate. So it's because the acreage, there was a lot of the acreage was picked up about 2.5 years ago, and only have 3 years on the lease, so they had to drill it.
So we're doing the same thing that we work very hard to prevent others from doing to us, like our seismic deal on anything we do. We work real hard to try to control all the acreage, but the reality is with fractionalized mineral owners, miles deep in some of this stuff, they can't get it all, and they have to get it drilled, and that creates kind of a Wild West mentality. A bunch of cowboys like us now trying to go out there and buy under them when there's virtually no risk. But it is expensive. These are expensive wells. Yeah.
Run through the economics again about buying into these wells with
Well, let's.
overrides and
Okay, we're typically getting a 75% net revenue, and when you buy in under it, you're not paying any operator carry. So there's no promote other than what we pay for the leasehold. So these are at cost deals. And if you look at if you run the numbers yourself, take 75% of production, and we can look at production so many months deep. A lot of these things reflect paying out less than a year. And that's very realistic.
what kind of maintenance cost goes on a 3-mile lateral that wouldn't be on a $6,000 vertical? You know what I'm saying?
I'm not aware.
There's a lot, obviously, longer wells with, but these things, the beauty is these things free flow because of such high pressure, high volume. they typically free flow through a period of time that should return all of our capital. I mean, I believe the potential is in everything we're looking at, pay out in less than 12 months.
And that's kind of the profile that these things need to have for the cost that they have, because the decline on these horizontal wells is pretty steep, but those first few months of production are so hot that they do pay off in that first 6
You
months.
know, tell them about the story about one of your lease broker buddies that's done some of these participations and what his experience was.
Yeah, I mean, one of the guys that's providing some of the leasehold opportunities to us he participates in small portions as well, and there have been numerous cases out here in the Western Anadarko Basin where you don't catch a check for the first 6 months, but that first check pays out the entire investment. And that's, I wouldn't call it typical, but it's not atypical either. So the opportunity for payout is pretty fast on a lot of these wells. And again, because the declines are so sharp, it needs to pay out pretty quick to be able to be economic.
We will have the offering memorandum completed hopefully by tomorrow, and we'll put that out for distribution to anyone that's interested. We did get a pretty strong response on our initial presentation. We got, I think, 30, 40 people that indicated an interest in seeing the offering memorandum for horizontal partners. So anyway, it's a different game. It's something that I think the economics and the opportunity have improved because the technology, the multi-unit ability to drill 3 miles laterally underground at deep reservoirs with high pressure, and it happens to be right here in our own backyard, right here in Oklahoma and Texas Panhandle. So pretty exciting. Okay, any questions on what we've covered today on anything? I've always amazed myself at how well we present things because there's no questions. Everybody got it all. We'll all be here after the dessert and dinner. We'll hang around. The guys from Red will be here. Clint will be here. Mike will be here. And if any of you individually would like to visit with us. Did anybody read the Arjun Murti super spiked article we sent out with the report like last week? If you read through that, Arjun says, and I agree with him, there are so many variables with respect to what the market price of oil is that one political variable of who's president of the United States is not a big mover. The mover is going to be what is the real underlying supply and demand, what's the geopolitical. We've got things about ready to blow up in both the Middle East and in Europe, like Russia, Ukraine, Israel, and all it's going to take is Israel hits the oil facilities of Iran and oil will be God knows how. So to say that oil's going to go down and stay down because Trump got elected, that's one variable, and I don't think it has a lot of significance to what really happens long term in the oil market.
And just to piggyback on that, most of this exploration is on private land, and an administration can't really affect a whole lot about what happens on private land. They can lease more federal acres and they can drill more federal acres, but that won't affect most of what happens in Oklahoma because it is private.
And majors and including OPEC now nobody's out there rushing to drill. I mean, the investment profile has changed. Oil companies are much more conservative, and they're focusing on shareholder real returns rather than trying to blow the doors off production, and for good reason. Okay, any other last-minute questions? Encourage you all to take your time, eat your dessert, and chat with us on anything you might want to talk about. Thank you for being here today. All right.
Yeah.